All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. And today is Wednesday, Wednesday, the 21st of May, 2025. So I hope you're all having a wonderful midweek. Yep. Look, I wanted to pick up quickly on a few economic data sets, which are kind of in a way the same, but coming out from various countries tomorrow. Look, I'm talking about the composite, the manufacturing, and the services PMIs, and those are coming out as not the final ones; those are the estimates, right? But still, those are going to be heavily watched, in my opinion. Also, the fact that there are a few countries actually in one day that are releasing those numbers, so this is something that could be watched by forex traders, forex market participants, and because those figures could have their effects on the local currency, depending, of course, how severely they deviate from the forecast. Now, look, about all this and a little bit more in this video, but before we go any further, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm going to just fix my camera just a little bit like here. Also something to mention is the website, our website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, the first thing I'm gonna jump in before jumping into the charts, the economic calendar. So tomorrow we'll start off the day with Australia's composite manufacturing and services PMIs, the flash ones, the estimates. And okay, we don't have a forecast here. Let me just actually refresh the calendar. Maybe it showed up already, but no, I don't see. No. Okay, I'll have to look at my other source here. But what I'm seeing is that the figures are expected to come out a little bit on the lower side than the previous here. So okay. Look, as long as the numbers remain above 50, I think that the market will still be fine with it. Yes, not ideal, but as long as the figures remain above 50, basically remain in expansion territory, then maybe Australian dollar could remain somewhat on the positive side. However, in this case here, it depends against which currency, because at the moment, if we're looking at AUD USD, then DXY is on a bit of a down move and kind of remains on that move. We broke this upside line, so pairs like AUD USD are and GBP USD, Euro USD are actually enjoying the moment. So However, looking at this little formation, and I talked about this in my morning webinar, you can always check it out on our YouTube channel. Basically, I talked that, look, despite whatever's going to happen, I'm going to remain kind of neutral as long as we stay inside this pattern. Now, this pattern looks to me like a possible maybe triangle pattern here. Just let me show you what I'm talking about. So basically something like this. So while we remain inside this pattern, okay, great. This could move, just kind of from one side to another side. But if we look at it from the kind of slightly broader perspective, then we'll see that the prevailing trend was to the upside. And whenever we kind of start forming some sort of like triangles, in this case like a symmetrical triangle, which basically, okay, it's a little bit tilted maybe to the downside, however, still a symmetrical triangle, and the prevailing trend was to the upside, so the greater chance for this one to break out is to the upside as well. However, I need a confirmation break, and ideally I would love to see a push above the 0.6515 zone right here, just to be a little bit more on the safe side. Yes, great if we clear the upper side here of this triangle, wonderful. But if we clear the 0.6515, then yes, this makes me a little bit more happy because a forthcoming higher high will be confirmed, and then we could start shifting our attention maybe towards some levels around here near the 0.6688 zone, and then we'll go from there, of course. But if we do fall below the lower side of the triangle, we also clear the 50 and the 100-day EMAs. This way, it opens the door to some lower levels. I'm not saying that I'm going to get very, very pessimistic here. No, I'm just going to aim so for some of these key support zones, and then we'll go from there. So the next in line in terms of providing us with the composite and manufacturing and services PMIs, again the flash ones, is going to be Japan. Now Japan is also delivering its machinery orders, but yeah, the flash numbers here are expected. Well, actually expected. Again, we don't have a forecast here on TradingView. Looking at the other source, okay, look, we are expecting the manufacturing to come out the same as previous, services to decline a little bit, and composite to decline. So also in a way leaning towards the lower side together with Australia. So what can we say here? For now, let's say if we're looking at AUD/JPY, we're saying that the yen buying is kind of in resumption, and like we're resuming the yen buying again, because maybe the market is a little bit fearful, because there like are some uncertainties now are emerging from the whole tariff thing. The stock market is kind of a little bit on the slower pace right now. Again, maybe there's just a little pause before another possible leg of buying, but again, maybe we're just ready for a little bit of a retracement of some sort here. And that's why everybody's jumping slowly into the Japanese yen. So if we're looking at USD/JPY right now, you can see clearly that yes, so we're drifting nicely to the downside, and people might start thinking that, hey, maybe the market's getting fearful. However, let's not forget it, DXY is drifting right now to the downside, so this is kind of just playing out nicely. Now look, in terms of Japanese data, I think it's going to be this way, that again, this is only these are only my thoughts. So I think that even if we come out a little bit lower than the forecast or something, as long as it's not severely into contraction territory, or let's say the manufacturing PMI does come out lower, still remains in contraction. It's kind of like let's say comes out somewhere around the 48 mark. That's fine. If the composite comes out, let's say still around 50, it's fine. Services PMI is also around 50, it's still fine. So it's like, even if we do see a little bit of a decline, it's still fine, because I think the currency will be affected mainly by the broader market sentiment and what's happening in general in the equity world. So again, depends on which currency you're looking at. Let's say if it's AUD/JPY, then if we do get some sort of like slightly better numbers, then maybe AUD will push back up again. And in general, looking at this picture, we're currently resting on this broken downside line. And as I said before in my previous videos, that whenever we break a trend line, we tend to retest it from the other side, and then kind of it may act as like a little trampoline here, if it's a broken downside line. But if it's a broken upside line, then again we retest it from the bottom and then kind of move back down. So again, it does happen often, and let's see if this is going to be the case again. So in pairs like these, look, also keep your eyes on the market. If the market sentiment improves, then yes, I mean, we could see this pair pushing back up. If market sentiment improves, USD/JPY could also drift a little bit back up, or maybe if the US dollar cannot find any strong grounds for a rebound, then we could still see downside move, but in a risk-on environment, maybe this could stabilize a little bit, or maybe could start moving sideways. Again, this pair would be best probably to kind of, if you missed the move here, okay, we're examining the downside, so probably at the moment don't chase the market here. Probably wait for the numbers to see what's going to happen here, and then you can maybe act if you're comfortable with that, of course. But at this point, it would be like something like chasing, and we just broke the upside line, so you probably should have looked at the break initially. This is what I was mentioning in one of my webinars this week, we got the breakout. So now at this point, if you're not in this trade already, then I would say don't go in, because again, it could, like I said, with the data that's coming out, maybe we could see some sort of choppiness a little bit. And the same, like I said, we're currently going for this tax bill that they're in the US they're trying to approve, so also uncertainty how the US dollar will react. Now going further in the day, we have the Eurozone composite services and composite manufacturing and services PMIs together with the UK ones. So and those are like in half an hour difference, really getting released. Again, the estimates. So what we're having here on Euro USD, we're having a nice push higher again with the numbers here for from EU. We're expecting slightly better numbers. If those come out even better than the forecast, we could see Euro actually pushing further north. So keep your eyes on that. Of course, again, we broke the downside line. We're approaching one of my key areas of resistance near the 1.1381, 1.1425. So we might stall a little bit here, but if that gets cleared, my next target is the 1.1573. That's my preference. That's the highest point of April. And with the UK numbers, those are expected also to come out a little bit on the better side. Look, in general, I would say this way: if okay, I bet manufacturing probably will stay below 50, but if composite and services can jump back, higher than the 50, then yes, I think that this is where GBP could actually enjoy the moment and could push further north. In general, today we saw GBP pushing nicely to the upside because again, inflation came out on the higher side. So maybe it could play out positively for for the PMIs as well. Again, we know that. A little bit of inflation. If inflation is picking up, maybe that means like there is demand for the products, of course. But okay, inflation cannot go way too crazy. But in general, kind of initially in the short run, it indicates that there is growth. There is movement, and that's what I'm saying. If we see the numbers coming out here, the UK numbers coming out like above 50, then at least the two of those, the composite and the services, then I would say GBP could continue its rally. In general, this week I think it's enjoying the moment. This is a weekly chart, by the way. You can see that we're stalling near this key area of resistance. So let's see if we can clear this again. And go further north towards maybe the 1.35 zone or even higher. And also very quickly on the Canada. Okay, Canada tomorrow is releasing its PPIs, but the US as well. Look, composite manufacturing and services, PMIs, flash. At the moment, the expectation is for the numbers to the manufacturing and the services to remain in above 50 and basically in expansion territory. Now, let me just check what's the composite figure. That one's also expected to remain in expansion territory. Look, it's good. Okay, great. We could see if we do see those good numbers, and by good numbers I mean, let's say higher than the previous, then I think that yes, maybe there could be some stabilization moment for the US dollar. However, I think that the US dollar right now is a little bit more vulnerable to the what's happening inside the inside the US, basically inside of the US politics. So they're dealing with that bill. So hey, let's see if the market kind of reacts more to that rather than the flash PMI figures which are coming out tomorrow. I think that, like I said, for those other countries, the US PMIs are going to be for other countries, their PMIs, their flash PMIs are going to be probably more important. That's why we could see more reaction there. But for the US, yes, it's also important. However, for the dollar, I think that yes, it might be more subjective to actually some other data. For example, existing home sales, that's something to keep in mind. So those are the final figures that are coming out. Also, before that, we'll get the Chicago Fed National Activity Index, initial and continuous jobless claims. So those are important. So we have the PMIs in between, but I think, like I said, existing home sales are the final ones. So maybe those could be the better driver of for the US dollar. So we'll keep that in mind, of course. So, ladies and gentlemen, that was a quick take on the composite manufacturing and services PMIs, the flash ones for a few countries out there. So hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, and let me know in the comments what you think. Do you agree or you don't agree? And we can go from there. So thank you very much, and I shall see you later. And also, I keep on forgetting to say, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.